Hi traders, welcome to another weekly Forex forecast on FX list, which is for 16th to 20th of November year 2020. In this week, I'm going to share with you some list of currency pairs I have on my watch list next coming week should in case of trade breakout opportunity. And then if today is your first time view my YouTube channel, do not forget to click on the subscribe button as well. Hit on the notification bell so whenever I release additional content of this kind, you're gonna be the first to be notified. Also, remember, forex trading is an high risk investment as well and high rewarding investment. Therefore, do not trade more than the amount of money you cannot afford to lose, and then do not trade with a borrowed money. Here are the list of currency pairs I am watching out for next coming week. I have the British pound sterling paired against the USD. I have the Euro paired against the USD. I have the USD paired against the Japanese yen. I have the New Zealand paired against the USD. And then we're gonna wrap up things with the US oil. So let's dive into the weekly Forex forecast right now. The first currency pairs on our watch list is the British pound sterling paired against the USD. I pointed out, this pattern which I got right here. I shared this with the VIP members community of mine. That was the last week. I said this is a rising channel as well. I shared this in my last weekly Forex forecast, even though I didn't release it over the weekend. I later released it on the Monday due to the US election. That was the previous weeks. So we can see right from the swing low right here, we can see our price had been respecting this dynamic support trend line, and then our price went in a bullish rally. And we can see price carved another potential rising channel right here at this mid level right here, which does signals a bullish rally right here, but a rising channel has a technical implication of a bearish reversal. And then I shared a trading setup right here with the VIP members community of mine. That was this week spent. And I said, for the fact price was being rejected at these swings low high right here, and then likewise right here at these swings high right here, and then there is a tendency price is gonna have a point of hindrance for a bullish rally right here. So don't be surprised if the pairs pull price downward. So we short right here, and then after we short at this swing high right here, I and the entire VIP members community of mine, we bagged in over 100 pips in profit. So next week, what are we going to look out for on this currency pairs as a price action trader? So next week, this is my personal decision, personal opinion on this currency pairs. Right now, I am not interested to buy this currency pairs for the fact price is currently approaching a very strong resistance level. And this resistance level acts at the price level of the 1.33875, which was the last historical high for the price right there. That was in September when price carved a bearish member right there. We got a massive sell off. So what I'm gonna do next week is I'm gonna look out for a more bearish rally on the British pound sterling. If I can figure out a strong bearish rejection based on the 4-hour chart frame, then I'm gonna be looking out for a sell opportunity. And then if price can make a bearish rally to the key level support, which acts at the price level of the 1.30125, then we need to pay close attention at this level. A daily close below this key level structure right here does has a high possibility to interest the pairs to pull price downward in order to retest this dynamic support right here. And then if that should occur, you have to pay close attention to the key level structure of the 1.30125 and the dynamic support trend line, which acts right here, which had been rejecting price in a bullish rally right from the midpoint of May and the June 2020. So if the bulls failed to defend this dynamic trend line right here, and likewise the horizontal key level structure right here, then it's a signal the bears are willing to pull price downward to expose the next key level support, which acts at the price level of the 1.27225. And this was a last swing low for price. That was in ending of September, and the right here is swing high resistance for price. That was in June of 2020. Alternatively, nothing is impossible in the market if the bulls should step in next week, whereby they pull price more upward and then ensure a price closing above this dynamic resistance trend line right here. Then the next key level resistance we have to look up to is the key level resistance at the price level of the 1.33875. If the bears fail to defend this key level structure, whereby the bulls successfully ensure a daily close above this level right here, then it's a signal of the continuation of the previous bullish upward rally. So let's check the next potential key level resistance on these currency pairs. Here comes the weekly chart frame of the British pound sterling paired against the USD. And then based on the weekly chart frame, we can see the key level resistance which acts at the price level of the 1.3387 had been a very strong resistance level for price at this level right here, likewise right here. In fact, right from what? July of 2019, as you can see right here, July of 2019. So it's a multi-year resistance key level structure. So this is one of the major reasons why I stated no, I don't want to buy this currency pairs. Instead, I would rather look out for a bearish rally. And then if price can ensure a daily close above this resistance structure next week, that is a price level of the 1.33875. The next potential resistance key level structure acts at the price level of the 1.36887. So this is my technical personal opinion on this currency pairs next coming week. The next currency pairs on our watch list is the euro paired against the USD. We can see right from this single right here, we get a symmetrical triangle which constitutes into a bullish upward rally, a bullish flag, and then right here a rising flag. And then since then, when price broke this dynamic trend line right here, this level had been acting as a dynamic resistance for price. Whenever price retests this dynamic trend line right there, it always acts as a what? Dynamic resistance trend line structure. So for as long this dynamic trend line still rejects the bullish price action, then it's an indication the rally right here is still under the influence of the bears, because the last swing high we got right here was being capped by the bearish pin bar right here, and that was the September of 2020. And then next week we need to pay close attention to how price reacts to this dynamic trend line, because it is a very strong dynamic support trend line right here and a dynamic resistance trend line right here. Also, we need to pay close attention to this minor resistance horizontal level right here, which I represented with a gray rectangular box right here. You can see whenever price gets to this level, we had a bearish rejection. Likewise right here, a bearish rejection. And then right here, a bearish rejection. And then this price level acts at the midpoint of the 1.1900/1.18500. So if the boost should ensure a strong daily close above this dynamic trend line right here, then it's an indication the bull are willing to expose the next resistance structure, which acts at the price level of the 1.19621. Alternatively, next week, if the bears should set in whereby they pull price downward, they still need to clear off this dynamic support before they can anticipate for a more bearish downward rally. And then the dynamic support right here acts at the price level of the 1.17041. Likewise, the next potential support acts at the price level of the 1.14428. So it means before the bears can re-expose the support structure right here, they have to clear off the last swings low structures right here, and this acts at the price level of the 1.16000. So next week, I'm gonna patiently pay close attention to see how price reacts to this dynamic trend line right here, and then how price reacts to this support structure right here. So if the boost should continue a bullish upward rally next week, then I'm gonna patiently wait to see how price gonna react to this level right here. But if the bear should step in whereby they pull price downward to this level right here, I'm going to be willing to pull a trigger right here for a shorting position, not until if I can see a very strong bearish price action bar right here, in order to aid my analysis for a more bearish downward rally to the next level right here. The third currency pairs on our watch list is the USD paired against the Japanese yen. I shared my technical opinion on this currency pairs with the VIP members community of mine last week, and I said, it's not advisable to chase the trend when we can figure out right here. That was a massive bullish buy right here, and then that was almost 247 pips. I advise do not chase the trend. And then after price keeps on fluctuating the next days, I said no, at this level right here, I can figure out a very strong bullish momentum right here. And not only if you can see a strong bullish close above this dynamic trend line right here, then that's actually gonna signal a bullish interest. But after price actually failed to ensure a strong LD bullish close above this dynamic trend line, which I've been rejecting price right from the swing low high structure right here, that was in July. Likewise right here, August, And then right here, October, right here, I said there is a high possibility for price to be rejected at this no structure right here, and then which actually no resulted into our bearish no pullback. So at this level right here, no, I'm gonna patiently monitor this currency pairs next week to see how price react to the key level support at the price level of the 104.167. We can see this was a support structure right here, that was in August. Likewise right here, that was in October, and then right here in what, ending of October. Likewise right here, I want to see how price is going to react to this level next week, if the bears can pull price downward right here. And then alternatively as well, if the bulls can ensure a daily close above this dynamic trend line as well right here, then I'm going to be willing to pay a close attention to see how price react to this no minor level structure right here, support minor level structure right here. Likewise the dynamic trend line right there. So the USD paired against the Japanese yen no has no a nice setup, technical nice setup next week. You see that the bulls no at this level right here, and then likewise right there for the bears. So there's something I want to show you guys based on the weekly chart frame as well the monthly chart frame. So let's check the weekly chart frame. So here comes the weekly chart frame of the USD paired against the Japanese yen. We can see, if I zoom in on this currency pairs totally, we can see price had been fluctuating right from this level right here. We can see our price has been respecting the dynamic no trend line based on the weekly chart frame. Likewise right there at this high swings right here, price no actually carved no a what or symmetrical triangle. And then we all know technically a symmetrical triangle has a technical implication of two direction, which means price can either break to the upside or to the downside, which is signifies no an indecision or chart pattern. And then let's zoom in on this currency pairs once again. Zooming in right here, you can see at this level right here, after price broke the dynamic trend line right here, price made a pullback. Likewise right here, a pullback. But at this level right here, we had no a nice structure right here. That is a healthy bearish close out of this dynamic trend line, which had been acting as a point of rejection for a long period of time. It's a multi-year dynamic support trend line. So price eventually carved a strong bearish bar. Not only price carved a bearish strong bar out of this dynamic trend line right here, there was also a bearish prayer right here. So last week again, we can see how last week carved a bullish bar right here, but that was another what bearish prayer at the edge of this bullish bar right here, which does signifies the bears are so much active on this currency pair. So next week I'm gonna patiently pay a close attention to the dynamic trend line right here based on what I can figure out on the weekly chart frame. I'm gonna see how price react to this level right here, as well how price react to the key level support of the 104.167. And then I something I want to show you guys based on the monthly chart frame. If you have been following my weekly forex forecast for some weeks right now, you're gonna figure out I always emphasize on the monthly chart frame of this currency pair. So let's check the monthly chart frame. So here comes the monthly chart frame of the USD paired against the Japanese yen. We can see the pattern properly right here, a symmetrical triangle, and then we can see how the month of November is that is reacting to this dynamic support trend line right there and the horizontal key level structure at this medium. So we still actually have a doji right there, which means in the month of November there is still a point of indecision for the bears and the bulls on this currency pair. So the best thing we need to do on this currency pairs is, for the fact this dynamic trend line have been active on a long on a higher time frame, it is better to pay close attention to the weekly chart frame to see how price react. Maybe it's gonna be a weekly close below this level structure right there. That is a level of the 104.167 and dynamic support trend line. So to conclude our analysis on the daily chart frame, if you want to get into this currency pairs next coming week, I'm going to show you how you can actually get in early. But take note, it's very risky. So do not risk more than you cannot afford to lose. So it's advisable you take a small position size on this currency pairs. So back on the daily chart frame, if you want to execute this trade on, maybe you want to get in early on this currency pairs, the best thing to do is to see a strong bearish close below this dynamic that is a key level structure right there. That is a price level of the 104.167, and then look out for a strong retest. Make sure you look out for a retest. You can see right here we got a strong bearish close right here. After price made a retest, the bulls successfully ensure a bullish close above this key level structure once again. So next week, if you want to get in early on this currency pairs, look out at this level structure of the price level of the 104.167. Look out for a strong bearish close, and then look out for a retest of this key level structure. That is, price need to carve a strong bearish price action bar before you can actually anticipate for a more bearish rally. Alternatively, to be on the safer side, pay close attention to the weekly chart frame to see how next week is going to react to this level. Maybe it's going to be a weekly close below the key level support of the 104.167. Alternatively, next week, if the bulls should pull up price, they still need to ensure a daily close above the key level resistance, which acts at the price level of the 106.070 before they can anticipate for a more bullish upward rally. We can see this was the last low high swings right there. So if the bulls should ensure a daily close, bullish close above this level right there, it does signals a potential of a next bullish upward rally in order to retest the next potential resistance, which acts at the price level of the 107.974. And then the fourth currency pairs on our watch list is the New Zealand paired against the USD. We can see right from the swing low right there, we got a massive bullish upward rally, and the price carved to a rising channel right here. So let's zoom in on these currency pairs. Zooming in on these currency pairs, we can see price actually approached a very significant key level structure last week. That's the resistance structure of the 0.69089, as well a dynamic resistance trend line, which had been rejecting price right from the swing high right here. You can see we got a bearish rally. Right from the swing high right here, a short bearish rally. Right from this swing high right here, a bearish rally. Therefore, this is a very strong, significant point we have to pay close attention to next coming week. This point of intersection does has a high possibility to interest the seller to pull price more bearish downward. I'm gonna zoom in more a little bit on this currency pairs. Okay, and then we can see the next key level support acts at the price level of the 0.67715. which was a resistance for price right there. Likewise right here, a resistance for this double top formation right here. So next week, we need to pay close attention to see how price react to this support. If the bears should step in next week, whereby they put price downward, they still need to ensure a daily close below this level before we can anticipate for a more bearish downward rally. And that is if you miss the bearish rejection structure right here based on the 4-hour chart frame. So next week, don't jump in at the middle of this rally right there. Instead, look out for a sell opportunity at the price level of the 0.67715. Alternatively, next week, if the bulls should step in whether they put price upward, they still need to clear off this dynamic trend line. Likewise, the horizontal key level resistance, which acts at the price level of the 0.69089. So let's check how this key level structure actually formed on the higher time frame, and that is the weekly chart frame. As you can see, here is the weekly chart frame of the New Zealand pair against the USD. We can see this currency pair had been in a long-term bearish downward rally. That is within a multi-year bearish channel, and price broke out at this level right there. So I'm gonna zoom in on this currency pairs. So for the fact price broke out of this multi-year bearish channel right here, we can see a series of consolidation of price right here, which does signifies bullish interest right here. The bulls are doing all what they can to make sure they prevent the bears from ensuring a close below this horizontal support structure of the 0.66027. Likewise, again, if I should zoom in a little bit on this currency pairs, you guys can figure out the kind of formation we got right here. It's like what inverse head and shoulder. You can see that. So I can tag this structure right here as a left shoulder, and the right here as a head, and the right here as a right shoulder. So based on the weekly chart frame, we got a bullish pattern, and then based on the daily chart frame, we got what a bearish implication pattern. So in order to trade these currency pairs, it all depends on your trading methodology. That is, are you a day trader, are you a swing trader, or are you a scalper? So if you're a scalper, you can navigate on the lower time frame like the 1 hour, 30 minutes, and maybe shorts based on the daily formation. And then if you are a day trader, I would advise stick to the bigger image, that is the daily and the weekly chart frame. Based on my personal kind of trading, I love to focus my attention on the bigger image right here, which is the weekly chart frame pattern. We can see the key level support right here, that is which acts at the price level of the 0.67715, was a resistance structure right here. Likewise, a resistance right here, that is the beginning of 2020, and the right here as a resistance right here, that was in 2019, and the right here as a series of rejection for price, that was in 2019, and the right here as a support, short-time support for price, that was in 2019. So this is a very strong, multi-year, resistance key level structure right there. And then right here, it does has a possibility to transform into a strong support structure. So if you are looking out, to sell this currency pairs next coming week, you got to be very, very, very careful of a strong multi-year, support key level structure, which acts at the price level of the 0.67715. So let's check back on the daily chart frame so we can make a conclusion based on the daily chart frame. Back on the daily chart frame of the New Zealand pair against the USD, this is my personal technical opinion next week. So this trade right here, I am not shorting this currency pairs. I'm not in a position on this currency pair. So I would rather wait to see how price react to this key level structure next coming week. That is the key level support of the 0.67715. I need to figure out how price react to this key level structure right there. If price can offer me a strong bullish buy signal right there, then I'm going to be willing to buy based on the chart pattern I can figure out on the weekly chart frame. I want to flow along with a bigger image. Alternatively, next week, if the boost should pull off price and then clear off this key level resistance, which acts at the price level of the 0.69089, then I will be looking forward to see how price react to this key level structure. Maybe price is gonna offer a strong bullish close and then maybe a strong bullish price action buy in order to join this continuation rally right there. Okay, traders, it's time we wrap up our analysis with the US oil. We can see right from the swing low right here, we got a bullish upward rally. We got a narrow rising triangular formation right there before price broke out right there. So if you are in my VIP members community, you should have been shorting the US oil by now. And then if you want to join us today, there's a link under this video. Make sure you click on that link so you can become a member of FSLS VIP community today. At the moment right now, I'm in a profit right here, and then if you're my VIP members community, you should be in profit as well on the US oil. So this is how I found the trade, and we can see how price broke out from the rising narrow wedge we got right there. That is a symmetrical triangular pattern right here, which is rising upward. Price broke with a well decisive bearish bar right here. Then price went into what a price within consolidation phase right there. So price again retested this level, and then price carved a strong bearish price action bar. That is a bearish pin bar, one of my favorite technical price action bar. And then price carved a strong bearish prayer bar right here in relation to the resistance structure right here, and then here right here you can see right here a very strong level right here. So I went short at this medium right here. So next coming week, I'm still focusing my attention on the US oil, and then I'm still supporting more bearish rally on the US oil to the next key level support, which acts at the price level of the 35.61. So if you miss the selling opportunity on the US oil, I'm going to show you how to get into this trade based on the lower time frame. That is the 4-hour chart frame. So let's check on the 4-hour chart frame next coming week. Here is the 4-hour chart frame of the US oil. We can see we got a rising trend line. You can see right here, swing low. We got what right here, or swing low right here. So you can see how this dynamic support trend line actually has been rejecting price, and the price is breaking through at this medium right there. So next week, pay close attention to see how price react to this dynamic trend line in order to look out for a more bearish continuation rally on the US oil. Also, don't forget to pay close attention to the potential swings right here. You can see that. So this level right here, you can see the swing right here, has a high possibility to serve as a point of rejection for the bears. So make sure you pay close attention to see how price reacts to this level right here. Okay, there's a price level of the 39.00, and then pay close attention to the next swings high low we got right here. and this would act at the price level of the 37.50/37.00. So guys, this is all I have for you in this weekly forex forecast, and then make sure any position you want to execute, do not risk one that you cannot afford to lose. If you haven't joined my free forex trading class, there's a link under this video. Click right there so you can become a member of my free class today. As well, if you are looking out for a reliable forex trading brokerage firm, there's a link under the video. Click on that link so you can register on a trusted, honest brokerage firm today. And then if you want to become a member of our VIP membership community, there's a link under this video. Check on that link so you can become a member today. In this community, you're gonna see how I approach the market, my trading decision, how I want to buy, I want to sell, my stop loss, my decision in the market. So as you learn, as well, you're gonna earn. So thank you guys. Thanks for watching this weekly forex forecast from the beginning to the end, and then do have a wonderful weekend. Peace.